Zambia's rate of accruing public debt has slowed over 75% in recent years. Official data shows Zambia's annual rate of public debt accrual has slowed dramatically in the period since President Hakainde Hichilema took office in August 2021, compared with the preceding decade, according to official data from the Minister of Finance and National Planning. The nominal public sector debt stock reached $28.9 billion United States dollars by end December 2025, as confirmed by Minister of Finance Dr Situmbeko Musokotwane in his ministerial statement to Parliament on February 20th, 2026.
Total public sector debt stood at $28.9 billion, comprising $16.1 billion in central government debt, $1.4 billion in government guaranteed external debt, and then the domestic debt was $11.4 billion. Obviously, this was borrowed in kwacha, but for the sake of consolidation, I expressed everything in dollars. That's why it comes to 28. Otherwise, of that, the external debt is 16.1 billion kwacha.
However, the rate at which new debt has been accumulating, the key measure of borrowing behavior, has slowed by more than 75% approximately, between 77 and 79%, depending on the baseline period, compared with the decade prior to August 2021. Now, between 2011 and 2016, net public debt accrual averaged approximately $2.2 billion United States dollars per year, with the total stock rising from $3.6 billion United States dollars to $14.6 billion United States dollars. To mid-2021, the rate increased slightly to an average of $2.4 billion United States dollars per year, pushing the total stock to $26.4 billion United States dollars by the end of that particular period. From August 2021 to end December 2025, the net accrual has dropped to an average of $500 million United States dollars per year over approximately 4.5 years, a slowdown of about 79% compared with the 2016 to 2021 rate and 77% compared with the 2011 and 2016 rate. Finance Minister Dr Situmbeko Musokotwane told Parliament that these trends reflect an economy stabilizing towards growth. Preliminary GDP expansion reached 5.2% in 2025, up from 3.8% in 2024, driven by recovery in agriculture, supported by improved rainfall, extension services, and full e-voucher FISIP rollout. Mining expansion, with copper production rising at 7.8% to about 890,345.79 metric tons, and continued growth in the ICT sector. A bumper maize harvest of 3.66 million metric tons strengthened food security and eased food price pressures. Inflation declined to 11.2% by end of 2025, down from an average 15% in 2024, and returned to single digits at 9.4% in January 2026. Gross international reserves strengthened to $5.5 billion United States dollars by end December 2025, equivalent to 5.2 months of import cover, supported by mining inflows, IMF disbursements, project financing, and interest earnings. The current account deficit narrowed sharply to about $25.1 million United States dollars by end September 2025, from $541.6 million United States dollars earlier in the year, supported by stronger exports. The 2025 budget closed with a deficit of 3.4% of GDP, better than the projected 4.6%, reflecting stronger revenue performance of 187.85 billion kwacha and controlled expenditure of 223.73 billion kwacha. The successful conclusion of the 36-month IMF Extended Credit Facility program in late 2025, with a final disbursement of 190 million United States dollars, bringing total support to 1.7 billion US dollars, has paved the way for a successor program focused on growth, investment, job creation, and expanding productive capacity. Zambia's debt to GDP ratio has declined from 115% in mid-2021 to about 85% by end 2025, with the IMF assessing the country's debt as sustainable but higher risk of distress and improvement from area distress status. This approach has avoided the rapid escalation in previous years, prioritizing restructuring, fiscal discipline, and concessional borrowing aligned with reforms and essential development needs. These developments reflect a clear direction from economic repair to disciplined growth, with borrowing anchored in transparency, accountability, and alignment with the national priorities that citizens can track.